Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Friday, August 29th, and you are tuned into your Friday chart fix, where we are going to cover 5 of the most important charts that you need to watch for the coming weeks. First, we're going to start with the percentage of stocks above the 200-day. It expanded to levels not seen in over 6 months. That shows improving breadth because more stocks are in long-term uptrends. Then we'll look at XLK, the Technology SPDR. It is consolidating within a leading and long-term uptrend. And we'll show the key level to watch that, if broken, could lead to a correction. We're not there yet, though. Cybersecurity did correct from July into August, but it is ending that correction with a breakout. And then we'll look at a stock within that group that has a classic bullish setup and breakout with a big move on Thursday. And finally, we finish with big banks. You know, it can't be all that bad when the big bank ETF, KBW, is hitting 52-week highs. It's leading on the price chart and on the price relative chart, and we'll look at that. So this first chart you're going to see here is the percentage of stocks above the 200-day moving average for the S&P 500 in that middle window and the S&P 1500 in the lower window. S&P 1500 is an interesting index because it includes large caps, the S&P 500, mid caps, the S&P Mid Cap 400, and small caps, the S&P Small Cap 600. So right there you can see 1,000 of those stocks, 2/3, are from the small and mid cap area. So this index is dominated by small and mid caps. And what we can see here, if we look at the chart on the right there, you can see that this indicator, the percentage of stocks above the 200-day, broke above 60% for the first time since January. In fact, it hit its highest level of the year with that move above 65% in late August. And that shows more and more stocks moving into long-term uptrends, especially in the small and mid-cap area. And that is a positive because it shows that the market advance is broadening into other areas. If you look at the S&P 500% above 200-day, it got above 60% there in early July 3rd, I think. And it has hovered around 60%, but it hit 70%. And that was also the highest level of the year. So basically, we have a 2025 high for percent above 200-day in both of these indexes, and that shows broadening strength in the stock market. Now, one more thing I want to point out here is, if you'll notice here, the blue shading, that's for the S&P 500. This percent above 200-day moving average indicator held above 60% from December 2023 until December 2024, an entire year. That is a strong and broad bull market that lifted most boats in 2024. If we look at S&P 1500% above 200-day, it was mostly above 60% for a year as well. It had a couple of dips, just below 60%, but it didn't start breaking down until December and January, you can see there. And then we had a breakdown into March, which preceded the market breakdown in March and into April. But right now, we're seeing improvement in the percentage of stocks above the 200-day, and that is net bullish. Now, these two indicators are part of our market regime page and the breadth models that we use to define bull and bear markets. And we keep track of the major signals that do distinguish between bull and bear markets on this page. And we can see there's the technical event timeline. We started with capitulation on the 4th. We got this wide breadth thrust on April 24th. Then we got another thrust on the 29th. The middle of May was when the trend really changed, because that's when you got these big gaps and breaks above the 200-day moving averages for SPY and QQQ. Then we can see another cross in mid-May. And on June 10th, the breadth finally caught up in the NASDAQ 100. And then on July 22nd, the S&P 500 breadth caught up. And now in August, we have the S&P 1500 breadth catching up. So right now, all systems are go as far as the bull is concerned. And we also track yield spreads. They continue to narrow. And we see the 3-month Treasury yield hit a 52-week low earlier in August, and that foreshadows a dovish Fed. So now let's look at XLK, the Technology SPDR. And this one, of course, is important because technology accounts for around 33% of the S&P 500. It's by far the biggest sector in the S&P 500. And if we look at XLK, we can see it's in a leading uptrend. You know, it was one of the first to break above that mid-April high, and then you got the gap and breakout in mid-May, and that's when the long-term trends for SPY and QQQ also turned bullish with gaps and breakouts. We got a little pennant and a breakout, and then we surged to new highs. And basically, since the end of July, we've been moving sideways. Now, sideways is not bearish. That's just a consolidation. So we've had a big move up. It's kind of like this pennant. You had a big move up, a pennant, and the breakout signaled a continuation higher. Now we have a big move up, and we have a sideways consolidation. And typically, that is a rest within the uptrend. And if you get a breakout at 270, that opens the door for a continuation higher. Now, consolidations can break the other way sometimes. You do have a bullish bias because we're in a bull market. Long-term trend for XLK is up, and it was leading into August. And if we look at support here, we can see these two lows in August marking clear support at 255. So if we break here, that's going to be a short-term negative. It's not going to be bearish. It's going to lead to the next setup. And if we do break support at 255, then I look for the next long-term support area. And we can see broken resistance levels here turn into support. We have another one there. We have the rising 200-day at the bottom end. So that 235 to 245 area is the area to watch for support if we break 255. As long as we hold 255, everything is fine, and we think the advance continues higher because the bias is still up. So within the technology sector, I'm seeing a bullish setup and a breakout in cybersecurity. So you can see cybersecurity here. It had a move to a 52-week high there in early July, and then it corrected into the middle of August. And it firmed around 75 throughout August, basically. And you can see this channel, I think, is a correction within a long-term uptrend. Because whenever I sit down and look at a chart, there's two things I ask. First, is it in a long-term uptrend? Well, you had a 52-week high in July, and price is above the rising 200-day moving average. Second, I look at long-term relative performance. And down here, we have the CIBR-RSP ratio. And when that rises, you are outperforming. And you do have shorter-term periods of underperformance, like in February, March, and here in July, August. But long-term, this price relative is above its 200-day moving average. So if we go back up to the price chart, then I view this channel as a correction within that uptrend. You had a huge move. You're entitled to a correction. So we correct, we firm, and now we're getting a breakout. And I think this is a bullish breakout that signals a continuation higher of that uptrend. If we look at the price relative, you can see that correction, but it is now starting to turn up to suggest that cybersecurity is starting to outperform again. So cybersecurity is looking bullish again. So the basic strategy at Trend Investor Pro is to look for trades within the long-term uptrend. We're mostly focused on long-term uptrends, names that are showing some sort of relative strength, and I'm looking for a tradable pullback within those trends. And first, we define the broad market environment using our market regime page, and that is updated on a weekly basis. We also look at alternatives such as gold, copper, uranium, and Bitcoin. They were covered on Thursday. We can see Utes were setting up XLU, and we've got that chart. And I also covered CrowdStrike 2 weeks ago. It's part of the Cybersecurity ETF, and it has a classic setup. And it was one of 10 stocks that I covered 2 weeks ago. There you can see there's this week's report where I covered a number of stocks, including Apple, which has a little pennant breakout working. But let's look at CrowdStrike with a classic setup. So I saw cybersecurity setting up, and when I see that happening, I go into the ETF and I look at the components and I see which other components might be setting up or showing bullish patterns. 2 weeks ago, we also featured Palo Alto Networks with an inverse head and shoulders. But if you look at CrowdStrike here, it had a big move up. You can see that huge move from, say, 300 to 520, breakout there along the way. 2 steps forward, basically, and then it corrected back to the rising 200-day. Well, that's one step backward. That's a 50% retracement. And as long as you can continue that 2 steps forward, 1 step backward, 2 steps forward sequence, you're going to have a long-term uptrend. And 50% is the base case when you're looking for a correction. Charles Dow said 1/3 to 2/3, with 50% being the base case. And once you get into that correction zone, you start looking for other indicators or levels that might confirm support. And if we look on this chart, we can see, well, we got the May low marking support. Going to make that arrow a little less thick. We got the rising 200-day marking support. So that's the blue shading. So when CrowdStrike gets into that 410, 420 area, it's in the setup zone. And also the falling channel is a typical pattern for a correction. And it also gives us a level to watch to signal that the channel has reversed. As you can see, you have this little high here, and we broke above that high here with a big move on Thursday. So overall, I think this is a long-term uptrend because you're still above the rising 200-day. I think this is a deep correction. You found support, you firmed for most of August in that 420 area, and now we've got a big outsized move and a breakout. And I think that is bullish as long as the 200-day moving average holds. Now, if we look at the price relative, you can see CrowdStrike does have some setbacks. You look here in February, March, it had a really sharp setback, and the price relative dipped below the 200-day. And then it recovered all the way with a new high in the price relative, had another setback in July where it moved below the 200-day, but the price relative turned back up with that big move on Thursday. So I think we're seeing relative strength come back into CrowdStrike. And speaking of relative strength, big banks are big leaders in the stock market. This is the KBW Bank ETF, and it basically features the biggest banks out there. We're talking Goldman, Morgan Stanley, Citigroup, Bank of America, Wells Fargo. And if these stocks are doing fine, AKA this ETF, if it's hitting a 52-week high, then that is bullish for the broader market, especially an ETF such as SPY, which finance still does account for a sizable amount of the ETF. As far as small caps are concerned, financial services is the biggest sector. It accounts for around 20% of IWM. But if we look at KBWB, which is mostly large cap related, we can see first there's that big thrust off the April low, the gap and breakout above the 200-day in May, a little pennant, and then a pennant breakout in June. And that led to new highs in July. So after we hit these new highs, you had a consolidation. And you can see here we had the prior highs marking prior resistance, and they turned into support. This is classical technical analysis. Broken resistance turns into support. And so we consolidated mostly above those highs here. And a consolidation at the highs is typically a bullish continuation pattern. A consolidation is a rest within an ongoing uptrend. And you needed a rest after this big move. So we got this consolidation, and then we got a breakout this week, and that signals a continuation higher. If we look at the price relative, we can see here that it broke above its 200-day in April. And that's when KBWB started showing relative strength. It's remained above its 200-day, and it moved to a 52-week high this week. So absolute price action on the price chart, 52-week high. Relative price action with the ratio chart at the bottom, 52-week high. That is a strong ETF. So the name of the game at Trend Investor Pro is to look for leading uptrends and find tradable pullbacks and setups within those uptrends. And that goes for ETFs as well as stocks. Each report that we put out comes with a video to dive deeper into the analysis and the method behind the madness so you can learn along the way. So check out trendinvestorpro.com if you'd like to know more. Thanks very much for tuning in and have a great weekend.